the death benefit proceeds are exempt from taxation because you're paying the premium with after-tax income. And so the government views these policies as solving a social problem. They have no desire or interest to shut them down. The sheer weight of the insurance lobby would crush any politician or any political group that would even dream at night of doing that. When we discuss the process of becoming your own banker, the infinite banking concept, this is going to trigger a shift in your thinking. And so the way that you are thinking now, as it relates to how you finance all the things that you need throughout your lifetime, if you think about all of those things, which are property, vehicles, investments, real estate investments, stock investments, insert whatever it is that you finance throughout the course of your lifetime, the way that you think about how you have done that up to this point in your life, you're going to shift your thinking to controlling how you do that for the rest of your lifetime. And so I can absolutely guarantee you that tonight is going to trigger rethinking your thinking. This gentleman that you see on the screen is my late mentor, the late R. Nelson Nash. And Nelson was such an inspiration to me, both personally and professionally. And by proxy, all of my teammates, Nelson serves as our inspiration each and every day. And I was blessed beyond the definition of good fortune to be mentored by Nelson for so many years. In fact, as a token of gratitude, I commissioned a documentary film on Nelson that you can view at no cost at nelsonnashfilm.com. When you get to that website, you can view the documentary, and I know that you're going to love it. It's a 1-hour film that will give you a much deeper glimpse into the essence of just how remarkable this man was. Now, I have a question. How many of you have read this book titled Becoming Your Own Banker? What I would invite you to do is to just take a moment and add this book to your wealth building library. It's a 92-page read. It'll take you less than an afternoon to get through. If you want to grow your wealth building library, this book needs to be included in it because it is going to absolutely open your eyes to a whole new financial world. I was first introduced to this in July of 2008. And going into my 16th year of specialization in this concept, we have helped thousands of people across Canada. And now we are operating in the United States as well and transforming people's financial futures with this incredible concept. Now, one of the things that Nelson often said was the more that you see infinite banking concepts, the more you'll see you didn't see. The more that you see this process, the more you'll see you didn't see. I want you to think about this. Regardless of where the money's coming from, you're doing all of the work to earn it, and everyone else is getting it. So how does that make you feel? A 10 is that you're furious, and a 1, it doesn't bother you at all. It's always been that way. If it makes you furious, stick around. We're going to talk about how to address it and how to change that. Now, secondly, what portion of your net worth is completely shielded from any risk of loss or taxation? 1 would be 0% and 10 would be 100. Now, you need to know in advance, I've never met a 100%er. The third question is, if you were to examine all of your assets, so if you were to look at your personal balance sheet, if you own assets corporately, maybe you're an entrepreneur, or maybe you're a real estate investor that has real estate owned corporately. If you were to examine both of those balance sheets, personal and corporate, what percentage of your assets can be converted into cash tomorrow? So you've got until end of business tomorrow. What percentage of those assets can be converted into cash without reducing the asset's value and without triggering a taxable event? That's the criteria. So think of a property. If you needed to liquidate a property tomorrow, are you going to trigger a taxable event? More than likely. Are you going to reduce the asset's value? Think about all of those assets on your personal and corporate balance sheet. The majority, overwhelming majority of people that we survey with this question are between a 1 and a 2. How many high caliber investment opportunities have you missed out on because you didn't have ready access capital on demand on your terms to participate in that opportunity? 10 would be more than you could count. 1 would be you've never missed out on a high caliber opportunity because you're bathing in capital. Now, this is probably one of the most important statements that I will share with you directly from R. Nelson Nash. And he would always remind us that unless you understand the problem, the solution just won't matter to you. Learning to think long range is really and extremely important. And I've learned from Nelson personally to think 70 years down the road. Now, I won't be here 70 years down the road, and neither will you. Most people in North America, the truth is that most people in North America can't think past this coming weekend. So let's start with the problem. All of your money is flowing through someone else's bank right now. I say that again. All of your money is flowing through someone else's bank right now. If you think about all of your income sources, if you think about all of your payments, your debit card transactions, your credit card transactions, your house payment, the car payment, the boat payment, your business equipment, all of your passive income, if you're an active real estate investor, if you're an active investor, period, all of your passive income is flowing through the books of someone else's bank. Your rental income, your dividend income, your T4, your W2 income, all of your business revenue, all of your expenses, all of those transactions involve the permanent transfer of money away from you. We all have major expenses throughout our lifetime. What are some of those major expenses? So when you think of all of life's major expenses, how are these major expenses financed? I'll give you a hint. One method is paying cash. Another method is credit. So the primary method of financing all of life's major expenses, if I was to address 99% of the North American population, these folks, including most of you, you're financing via cash, leasing, loans, or credit cards, or in some cases, stealing. That's how all of life's major expenses get financed. All of these things are financed through someone else's banking system. I say that again, through someone else's banking system. So you're doing all the work. Everyone else is getting all of your money. Is that a problem? You're doing all the work. Everyone else is earning and getting all your money. I talk to people all the time. Hey, how much money do you make? Oh, I make $100,000 a year. Are you an active real estate investor? I sure am. How much passive income do you make? Oh, I make another 12,000 a year. No, you don't. You just handle 112,000 a year. You don't make 112,000 a year. You're just handling it. All of that money is flowing through your hands, not into your hands. That is a problem, but we all have to understand and agree that that's a problem. Now, if you become all four characters in the financial play, which is the depositor, which all of you are right now, you deposit money on the books of someone else's bank day in and day out. The borrower, which the majority of you are, because you borrow money, you're always working with borrowed money, even when you pay cash for things, because you either pay interest to access someone else's pile of money, or you give up the interest that your cash could have otherwise earned. So you are the depositor and the borrower. You're not the banker because you're not controlling access to someone else's money, and you're not the bank owner because you're not the one profiting from all of that activity. When you become all four characters in the financial play, you're in a position of total and absolute control. And you create a very peaceful, stress-free way of life when you get the bankers out of your life, when you no longer have to rely upon a conventional bank for anything other than the convenience of debit. You have created a peaceful, stress-free way of life financially. Is that something that would be an advantage for you and for those that you care about? Being in a position of total control and having a peaceful, stress-free way of life financially, would that represent an advantage to you and the people that you care about? Do you feel like you're not taxed enough? In North America, the average family pays that percentage of their gross household income in taxes. The average family. The more you make, the more they take. Now, this guy just got his notice of assessment back via email. And as you can see, he's definitely not impressed. Now, the government, the truth is, whether it's the IRS or Revenue Canada, both governments are constantly hovering over your assets, your income, your savings with a giant knife and fork, just ready to consume them. The more you make, the more they take. Now, who's most at risk? You are. Even if you're the least bit effective at accumulating wealth, you are most at risk, especially if you're even the least bit effective at accumulating wealth. Now, I want you to examine all of your existing assets, personally and corporately, and I want you to ask yourself a very important question. Which of my assets are a sitting duck for future tax hikes? If you're an active real estate investor, you need to pay very close attention to that question. And you need to examine which of those assets are a sitting duck for future tax hikes. Look no further than the increase in the capital gains inclusion rate, and look no further to the fact that the government is going to require more money in the future, not less money. And where do you think the government's going to get more money from? Taxable savings and taxable assets. So would it be important to shield your wealth from onerous taxation? If the government creates a problem, too much tax, and then grants you an exception to the problem they created by giving you an opportunity to put money into registered retirement savings plans or registered tax qualified plans of any sort, don't you feel just a little bit that you might be being manipulated? These programs are all being created under the guise of giving you a break. If the government really wanted to give you a tax break, they would cut the taxes. Do you believe that they want to do that? Absolutely not. And Nelson used to always say, God rest his soul, he used to say, and you all just sit there and take it. And so if you realize that there's a place to warehouse your wealth that is shielded from taxation, where you have ready access to capital on demand on your terms without triggering a taxable event and without reducing the asset's value, how much of your capital do you not want residing there? Because from that place, you can go and conduct all of your financial objectives, whether it's investing in real estate, investing in the stock market, building wealth by acquiring companies, growing companies, whatever suits your fancy. From that place, you can go and do all of those things while your warehouse of wealth is shielded. But the truth is that if you have taxable savings or assets, you've got a problem. And so do your beneficiaries. I want you all to write this down. This is a write me downer. The worst inheritance is a taxable one. How much of your estate do you want to leave to Revenue Canada before the beneficiaries that you actually care about? I want you to think about that and think about that carefully, because you're going to have to reckon with it. There are no exceptions. Now, I'm afraid it gets worse. 34.5 cents of every disposable dollar is paid out in interest. This is not an interest rate, folks. I'm not saying 34.5%. I'm talking about interest volume. Now, what are some examples of interest payments? So if you think about all the money that's flowed through your hands and your family, as most people approach this first from an individual level, I'm going to think about how the infinite banking concept can be applied to me. I want you to think about your family. Think about all the money that's flowed through the hands of you and your entire family for everything that you've spent money on up to this point in your lives. Where did it all end up? Someone else's bank. That does not make anybody feel good. If you're a business owner, I'm afraid the problem is even further amplified. Either you or your family or your company will ever see any of that money again. Think about all the transactions that you took care of today and tally up that amount of money. You'll never see it again. You can't earn interest on it again. You can't spend it again. It's a permanent transfer of money away from you, not only for you, but for every generation that comes after you. Why do you think the banking business is the most important business in the world? Because that's where all the money ends up. It's inconsequential that there are many different currencies, that there are many different banks that deal with a portion of that money pool. There's only one pool of money on the planet. The question I have for you is, how much of that pool do you want flowing into your hands, not through? And how long do you want to keep it there? You earn income, you're taxed on it, all of your money flows to someone else's bank, and you repeat that cycle. How does that make you feel? Like this guy? Now, you should stop this cycle. I'm speaking to you, to each of you. And if you're on your phone, I'm living in your phone now. I'm speaking to each and every one of you. You should stop this cycle, because This means more money flowing into your hands for your dreams, more security for your family, and the control to truly enrich your life and the lives of others. Now, have you ever experienced frustration or limitation dealing with traditional banks? Well, I have too. And let me tell you, that feeling of being just another account number lost in a sea of transactions and red tape, nosy credit applications and borrowing terms that you don't control. I felt the same until I found this process of becoming your own banker, the infinite banking concept. Now, this part of my journey that I just want to share with everybody, I just want to describe to you. My wife and I, we financed our first principal residence together. This was back in April of 2008. Now, this was before I had been introduced to the concept. I wasn't introduced to the concept until July of 2008. And when we purchased this principal residence, we thought that we were standing on top of the world because you could get a 40-year amortization schedule back then, and interest rates were remarkably low. I think our interest rate was like 2.6%, or if memory serves me right, it was remarkably low. So Rebecca and I thought, wow, we're standing on top of the world. We've got a low mortgage payment. We've got a 40-year amortization schedule. We're doing great. Well, when I understood the problem, which was I'm doing all the work and everyone else is getting all my money, I wanted to solve that problem. And when we began to implement this concept, we got rid of the conventional bank 33 years ahead of schedule. And just from that one transaction alone, we're adding another 1.5 million to our wealth accumulation. We're redirecting those monthly payments that would have otherwise gone through the books of someone else's bank back into our own family banking system. Getting rid of the conventional bank 33 years ahead of schedule, I was so excited. I got on the phone and I contacted my late mentor and I said, Nelson, I've got some exciting news to share. We got rid of the conventional bank 33 years ahead of schedule. And he said, well, don't celebrate too early. You signed on for a 40-year amortization schedule. Did you not? I said, yes. He said, did you have every intention of making those payments on time all the time? I said, absolutely. He said, do you want to be an honest banker? I said, I sure do. He said, you need to finish your original loan schedule. You're just going to change the process of who's getting the money. That was one of the biggest aha moments in my journey with becoming your own banker. When my own mentor told me, always finish your original loan schedule. You're just changing the process of who's getting the money. Now, the infinite banking concept is the solution to the problem. Now, I know personally firsthand how it can help perpetuate everything that you're doing in your financial world today. And in addition to that, in order to do this, you've got to get into the banking business. So whatever you do for a living presently is the business that you're in right now. You need to add a second business, and that's the business of becoming your own banker. And we refer to it as the family banking business. Now, I want to review some basic facts. There are only 3. The first one is this: your money must reside somewhere. That's a fact. Secondly, you finance everything that you buy, even when you pay cash for things. That's also a fact. Number 3 is that someone must perform the banking function in your life. There are no exceptions. That is also a fact. Here are the 3 steps that you should take, because by doing so, you empower yourself with financial independence. You gain control over your economic future. You unlock wealth creation that aligns with your personal values and goals, not someone else's bank. Here's the first thing you need to do. You need to build a pool of capital inside of an entity that guarantees daily growth of cash value, ready access to capital on demand on your terms. Secondly, you got to recapture the interest, the money that you're presently paying to banks, to finance companies, all the things that you need to purchase throughout your lifetime. Thirdly, you need to protect your livelihood, your real estate portfolios, your investments, your retirement account balances, everything that you work so hard and tirelessly for, from being decimated at the highest levels of taxation. Build a pool of capital where? Dividend paying life insurance. Now, most people simply don't understand how dividend paying life insurance contracts work. The reason why The largest purchasers of dividend paying life insurance policies are the banks. I want you to stop and think about that for a moment. And you can check with Uncle Google bank owned life insurance. It's a tier one asset on the books of commercial banks. And so if the banks are encouraging you to put your money into RSPs and they can't do that, if the banks are encouraging you to invest in mutual funds and they don't do that, if the banks are encouraging you to unnecessarily subject your capital to risk, but yet they're plowing billions of dollars into bank owned life insurance, they're either really stupid and creating an abundance of wealth for their stockholders, the bank owners, remember the four characters in the financial play, or they know something that you don't. Which one do you think it is? They know something that you don't. That I can assure you. So let's mimic what the banks do and we'll do okay. To build wealth, the fact is you have got to reckon with tax risk, market risk, and liquidity risk. My question to all of you, do you want to either A, build wealth, or B, radically improve what you're already doing to build wealth? Dividend paying life insurance addresses all three of those risks sufficiently and completely because you have ready access capital on demand on your terms without triggering a taxable event and without reducing the asset's value. You eliminate your market risk entirely. The life insurance company itself contractually guarantees a number of things in every policy that I'm going to walk you through right now. You receive contractually guaranteed daily growth of cash value and certainty of lifetime access to money. Secondly, you become a co-owner of a life insurance company, sharing in the profits, which is a new business for you that doesn't require any of your time, talent, or energy. Dividends, which is your participation in the divisible surplus generated by the insurance company because you become a co-owner of the insurance company. That's why it is named a dividend-paying, participating life insurance policy. You participate in the divisible surplus generated. Those dividends, when they're declared once a year, cannot be repossessed and they cannot lose value ever. Your cash value grows daily and it cannot go backward. I say that again, it cannot go backward. And it is contractually guaranteed to match the total death benefit of the insurance policy by age 100 of the life insured in Canada and age 121 of the life insured in the United States. And if you're Canadian, these policies are fully exempt from the passive investment income tax rules. These policies are fully exempt from the passive investment income tax rules. So if you recognize that that's the greatest exemption that exists in our tax code today, how long do you want to wait before you take advantage of that exemption? You pay zero taxation on the daily buildup of cash value. You pay zero taxation on the death benefit proceeds. Your beneficiaries receive the death benefit proceeds income tax free, and you pay zero taxation on the dividends when you elect to use those dividends in the way that we coach you to use them. It is exempt from the passive investment income tax rules. You can be positioned to never pay tax on the ever increasing cash that you can access over the course of your lifetime. Now, I want to know, how would you sleep at night knowing that your money was no longer subjected to these risks? Now, your corporation can own it as well, and that provides massive tax advantages that are out of scope for tonight's talk, but we're happy to explore them further. If you own a corporation and you have any assets in that corporation, you need to investigate this further because it represents massive tax advantages. Now, I want you to list all the disadvantages of keeping more money in your family. Now, I want you to list the advantages of having more money flow into your hands rather than through your hands. Now, this is your opportunity to discover personalized methods of implementing this process, to elevate your wealth building journey, to take a first step towards a bigger financial future, because becoming the banker gives you the ability to control how you finance life's major expenses, and your financial goals become achievable realities. So I want you to take a moment. I want you to think about all the money that's flowed away from you and your family up to this point in your lifetime. Is it a little or a lot? A lot. Could you all write me a check for that amount of money right now? You can't, because the money flowed through your hands onto the books of someone else's bank, not into your hands and into your family's money pool where it belongs. When you implement this process, you get the money flowing into your hands, not through. There's a distinction. So, when do you want to change that? Having money flow into your hands versus through. Now, I want to share with you a little something, and then I'm going to show you our system of policies. Would that be okay if I just showed everybody what we're doing in our own family so that you can dream about going big or going bigger? Every year, we host an annual family banking meeting. And so we get together as a family and we discuss the utilization of our family banking system. We educate and coach our family on how to keep the money flowing into our hands versus through our hands. Everyone that you see in this picture is insured several times over. We involve the kids where they're talking about their experience with using policy loans and repaying policy loans. It's an incredible process. And we coach our clients on how to embrace the family banking system. And I want you to think about everyone in your life that would do anything for you. And I want you to think about all the people in your life that you would do anything for. And think about all of that money that you could have flowing back into the family, not through the family's hands. Joe Polish, he expressed something so powerful at the last Genius Network meeting. He said, there's a whole lot of talk about wealth accumulation. It's not just about making money, it's about not losing it. And not losing it is an entirely different skill set than accumulating it. And I have to give Joe all the credit for that because in that moment, it was such a powerful statement that we had to include it in our talk because people get so focused on wealth accumulation and wealth building. What about getting focused on learning how not to lose it and making sure that you understand that because your money must reside somewhere, that it should reside inside of an entity where there's no possibility of loss. And then from that place, you can go and address all of your other financial objectives. Now, here's our family's system of policies. In 2009, which was our first anniversary date, right? Because we got this process going in 2008, each policy anniversary, our first one being 2009, we had 2 policies in our family banking system. In 2024, we have 77 policies. Now, within that 77 policies, there are 27 individual lives insured. All of my nieces, nephews, my kids, my spouse, my business partners, my assistant, my sister, all the key people in the companies, the 12 companies that I have ownership interest in, all of these lives are insured. The premiums that we paid in our first year were $16,800. Our total premiums this year will be $1,013,048. Our death benefit was $500,000 in the first year. It's $41,293,000 as at 3 days ago. It's rising continually. Our cash value, which is not money, cash value is the net present value of the future payment of a death benefit. You get to borrow against the accumulating cash value. You get to borrow 90% of that ever increasing cash value as collateral. You borrow against that cash value to a maximum of 90% on demand on your terms, meaning the loan, which is a policy loan, is unstructured. There's no repayment schedule. You, as the policy owner, completely control the repayment schedule of the loan. And when you take a policy loan, the lien is not on what you're buying with the proceeds. The lien is on the death benefit of the insurance policy. So if you took out a policy loan to put a down payment on a real estate investment opportunity, the lien for that loan is not on the piece of real estate. It's on the death benefit. And in addition, these policy loans are not reported to TransUnion or to Equifax. They are private loans between you and the insurance company because you co-own the lender. You control the repayment schedule. You don't trigger a taxable event when you do this properly. So you need a good coach, which is any coach on my team will suit you just fine. And you don't reduce the asset's value. So if you look at this amount of cash value, $4,039,732, that is going to be higher tomorrow, the day after tomorrow, the day after that day, and so on. It must grow daily and it cannot go backward. We have a loan balance of 1.7 million, but my 4,039,000 of cash value is growing uninterrupted by the loan balance. Because remember, this 1.797 million in loan balance, the lien is on the 41 million of death benefit. The 4 million of cash value continues rising every single day uninterrupted because the cash value is contractually guaranteed to match the total death benefit by age 100 of each life that is insured. That puts me in a position of total and absolute control. If Kyle called me and said, I've got the best opportunity since before sliced bread, it's a $300,000 deal, but you need to act on it tomorrow. I am the only person in attendance here tonight that could act on it tomorrow. I don't need the permission of any banker. I'm the banker. I don't need to be underwritten by the bank owner. I am the bank owner. I'm the depositor. I'm the borrower. I'm all four characters in the financial play. You're not. So who's at an advantage? My question to you is, do you want to be at that advantage? Do you want to be all four characters in the financial play? I have ready access to 1.8 million in capital tomorrow. No credit check, no income verification, no lengthy nosy credit application. I'm not on the government's radar. All of my cash value is completely shielded. That puts me in a position of total and absolute control. Now, here is the aha moment. I want you to look at the figure, the sum of money that's flowing into our family's money pool every month. This is money that would have otherwise been permanently transferred away. Let me give you an example. My nephew just purchased his first car. He took out a policy loan, $4,900. The lien for that loan is not on the car. It's on the death benefit of his insurance policy that I own. I pay the premium for. So I make all the rules, don't I? When he is driving that car every day, his total cash value is rising every day. And every penny that he repays of that policy loan, principal and interest, he gets to reborrow everything he repays plus more. My kids, my nieces and nephews will never see a conventional bank for anything other than the convenience of debit. How do you like them apples? And if the family member doesn't pay it back, they never have access to another dime from the family's money pool, and they don't ever get a penny of death benefit. Plain and simple. We've already had 2 death benefit proceeds in our family. My father-in-law, who you saw in one of the pictures from earlier, he spent his entire career as a police officer. And years before he retired, I sat down with him and I said, hey, Papa, I want to take out a policy on you. I want to pay the premium so you don't have to come out of pocket a single penny. That puts me in a position of controlling the cash value, the beneficiary. And I want you to know that if anything happened to you, Nona will never have another bad day financially for the rest of her life. And he said, well, I don't think I'm life insurable because I'm type 2 diabetic. And I said, well, Papa, there's only one way to find out. So we applied, we got him approved. I purchased 2 policies on his life immediately. A number of years later, it was 2020, 5 weeks prior to September of 2020, right in the midst of COVID, Papa was diagnosed with stage 4 cancer. 5 weeks later, he passed away. The death benefit proceeds are taking care of Nona for the rest of her lifetime. And we purchased a policy on all 9 of his grandkids and paid it up for 10 years to honor his legacy. You can do this in your family. Whereas what happens most often when someone dies is you see a GoFundMe posting on Facebook where people are imploring their social networks to help a grieving family to get by financially. You don't have to be in that situation. And if you are even the least bit effective at accumulating wealth, you don't have to put yourself in a situation where your beneficiaries are forced to liquidate assets and get decimated in tax, and they get what's left over because Revenue Canada doesn't accept any substitutes for money, and they don't have a sense of humor either. And so you can and should put yourself in a position where you shield your wealth from onerous taxation, because someday you're going to die, and the people that you leave behind are going to receive a tax-free sum of money so that they can take the time to grieve the way that they should. What do we do here at Ascendant? We create heroes. If you live a long time, you'll be a hero to your family. If you die too soon, you'll also be a hero to your family. And so when you think about the advantage of this process, it's not just about all the living benefits of utilizing a tool called dividend-paying life insurance to implement a process named becoming your own banker, the infinite banking concept. The death benefit has merit too. One of our late mentors, Bob Shields, he would often say, I wish that everyone could die once just for a week and see the problems that they leave behind. Don't be that person. Do something about it. Plug that financial leak. Get that money flowing into your hands and stop it from flowing through your hands. The way to do that is you've got to create time. You've got to meet with someone on my team. Nelson always said, what happens in the policy illustration is the scene. What you do outside of the policy illustration is the unseen. And in my family, we don't rely upon a conventional bank for anything other than the convenience of debit. $80,000 every month flowing back into my family's money pool. Picture a day where more money is flowing back into your family's money pool. How much more could you achieve in your family's lifestyle, business, savings, and investments? How much more could you achieve? A lot more. Now, these are my 4 kids. This is an older picture, but I want to share with you. We teach our kids about this character. We teach our kids about the Easter Bunny. We teach our kids about the Tooth Fairy. Let's teach our kids about this man who developed and pioneered the most transformational process financially that you will ever encounter in your lifetime. Let's teach our kids about him because he's real. My daughter, one of my twin daughters, Caitlin, this is her quote, not mine. She said, "My dad put life insurance in place for me, not on me." Now, here's Caitlin. She has 8 policies in force by age 11. She has 1.8 million in death benefit rising every 90 days. I'm 49. Just imagine what her system of policies is going to grow into by the time she reaches age 49. She has 61,000 in cash value rising every day. She will never see a conventional bank for anything other than the convenience of debit. We've been empowering our clients with this process since 2008. We have thousands of clients across Canada, quickly rising client base in the United States as we just recently began operating there. We've got a proven track record, 16 years of specialization in this process of becoming your own banker, the infinite banking concept, a nationwide presence, client trust as evidenced by all the 5-star Google reviews we're blessed to receive, lifetime coaching. We have a client portal that you gain access to that's password protected, that has a treasure trove of resources on this concept that we've curated over the years. We do group quarterly client coaching sessions that are recorded and archived in our client portal. There is no shortage of resources, and we help you every step of the way. The essence of our coaching is to be responsible to you, not for you, because the most important words in the title of this book are right here: your own, becoming your own banker. That's what we're coaching and mentoring our clients to do, is to put themselves in a position of total and absolute control. Our expertise with business owners and real estate investors is unmatched. We work with business owners and real estate investors day in and day out. And regardless of who you work with, you get our entire team, and our team is incredible. Now, I know that I'm biased, but again, don't take my word for it. Just read those reviews. They speak volumes. Now, what I want to do before I do any case study, I want to take a moment and do some Learn with Jay Q&A.
So one of the questions here that we're looking at is, what if somebody doesn't pay back the loans in the family banking system?
That's a really good question. I would encourage anyone who implements this process, you should have a plan to repay loans before you access the loans to begin with. And if you have someone in the family that's defaulted, they're just not repaying it for whatever reason, then in our family, as an example, it's a one strike you're out rule. So if you run into difficulty making a payment and you don't communicate that to anybody, you just miss the payment, then you will never have access to another dime of capital from the family's money pool ever again.
There's another question here. How much do we need to get started?
We have clients that put in as little as $100 a month when they start policies on their children, their grandchildren, their nieces, their nephews. And we have clients who put in multiple 6 figures every month. And so if you're somewhere in between those two numbers, we can help you. And if you want to be our very best client, then we can let you know what that premium amount is. And it's 7 figures plus a year. But if you're in between 6 figures and $100 a month, we can help you.
Another one, how long before the governments close this down?
Well, I can actually speak firsthand to, the government's position as a member of CALU, the Conference for Advanced Life Underwriting. So I get to meet with members of parliament once a year, and the government's position on life insurance in general is quite clear. Government views these contracts as solving a social problem. So what I mean by that, why do you think the government provides so many incentives for you to donate money to charity? The reason is that the government doesn't have the money to do that. So they provide you with tax incentives to do that. So if you have a death benefit, which has merit, and God forbid the unthinkable happens, your family does not need to rely upon social programs in order to readjust, and carry on with their lives. That's why one of the primary reasons why the death benefit proceeds are exempt from taxation, because you're paying the premium with after tax income. And so the government views these policies as solving a social problem. They have no desire or interest to shut them down. The sheer weight of the insurance lobby would crush any politician or any political group that would even dream at night of doing that. And remember, who are the largest purchasers of dividend paying life insurance contracts?
Banks, you're right,
The
Jayson.
banks. You believe for a second that the banking industry is going to let the government shut that down? You got a better chance of getting struck by lightning than that happening.
One of the other questions that has been popping up here is, what is Ascendant? Is it an insurance company that also does coaching, or what is it exactly?
So Ascendant Financial is a managing general agency. And so we are an insurance agency. We're not an insurance carrier. So we don't distribute these life insurance contracts, meaning we don't develop them. And all that we do is we bind you to the insurance company. So we're a brokerage and we get compensated by the insurance company extremely well to do that. But we get paid very well. We're very blessed to be paid as well as we are. And we earn every dime of it. And in addition to that, all the ongoing coaching that we provide to our client community, we don't invoice our clients for that. That's all included in what we do. So we're quite innovative in our service platform and our service model, but we are a life insurance agency.
If you're starting your own banking system, how soon after you make your premium deposit payments can you take a loan out?
Loans are accessible immediately.
If somebody had cancer, but they've been clear now for 10 years, how are the carriers going to look at something like that?
Yeah, our experience has been that they view that favorably. The only way to find out if you're life insurable is to apply. So at Ascendant Financial, we're not the underwriters that determine whether or not you're insurable. The life insurance company controls that function. And so if you believe that you're not life insurable, the only way to find out is to apply. And it doesn't cost anything to apply. It's just an investment of time to complete the application process. But if it came back that in fact you were not life insurable, which declines are quite rare, you don't have to be the life insured. Remember what I shared with you earlier about my own father in law. I purchased policies on his life where I'm the policy owner. I pay the premium. I control the access to cash value. The reason I was able to do that is because I have a beneficial interest in my father in law. And so you don't have to be the life that is insured. These contracts are viewed very favorably as useful tools that solve a social problem. And governments, of course, understandably so, they hold life insurance companies in high regard because they know that the business is to manage mortality risk and to pay death claims and to ensure that those proceeds make their way to the beneficiaries and bypass probate, bypass creditor claims, and all the above.
What sort of insurance carriers do you predominantly deal with here at Ascendant?
Mutual, meaning they're not publicly traded because we don't want stockholders to be participating in the divisible profits generated by the insurance company. So we prefer to place business with mutually owned companies, meaning the dividend paying life insurance policyholders are the sole beneficiaries of the divisible profit generated by the insurance company and are the sole recipients and beneficiaries of all the owners' equity. As these life insurance companies grow and get massive in size, the dividend paying policyholders are the sole owners of the company. There's no shareholders that step up and say, I want a piece of that profit. So we prefer to place our business with mutually owned life insurance companies.
You're really sort of owning a piece of the banking
Oh,
system in a
you
way.
are. Well, yeah, it's an absolute, right? It's not sort of. You are. These policies are unilateral binding contracts. You become a co-owner of that life insurance company. And so if you knew that you could establish a co-ownership interest in a business that's never failed to produce profit and have been operating in the United States for the past couple hundred years and in Canada for the past 176 plus years, and you knew that these companies never failed to produce profit, how much of your capital do you not want residing there?
Can you go through a little bit of, what our process is for putting together some solutions for people who are thinking that this is for them?
Our process is to first meet and to have a really good conversation so that we can gain clarity on how you're structured financially presently, both personally and corporately, if you're a business owner, for example. And then we want to develop very specific objectives that you're planning to achieve, how much money is required to achieve those objectives so that we can engineer a solution to your problem. And engineering that solution means putting together your policy, your system of policies, and then reviewing that with you, making sure that you have clarity, that any insights that come up, you can have a really great conversation before you do anything at all. And then we make application to the life insurance company to get approval on those policies. And when they're approved, that is when and only when you pay premium. And then the moment you pay premium, those policies are immediately beginning to accumulate cash value, which, as we all know now, cannot go backward. You immediately become a co owner of the life insurance company, and your coach is readily accessible to you to make sure that you're onboarded and you get off to a great start. And then your coach is going to continually help you to gradually and incrementally become your own banker. So your reliance upon your coach is going to gradually decline over time, not gradually increase over time, because your coach is going to do a great job at equipping you to take control of this function as it relates to your needs, becoming your own banker.
That's really great. And just sort of to sort of provide that call to action there, Jason, with people who maybe they've got kids in their teenage years and they're moving into adulthood. One of the questions we had was, how can somebody start this on their own? Like at what age can they really sort of take hold and start getting their own policies?
So you can insure someone's life as early as 16 days old, and you can insure your life to a maximum starting age of 85.
What's the difference between, say, Ascendant and other companies that are, following Nelson Nash's methods?
No other company can become the best version of Ascendant. Our service model in how we take care of our clients, we are so remarkably proud of that. We have 16 years of specialization in this process. When you meet with your coach will be able to show you how he or she is actually implementing this in their lives. And when you select a good coach is someone who's got something to back up that statement of being a good coach. We have coaches on our team that have hundreds of 5-star Google reviews. You don't get that by being okay at what you do. And so, what makes us unique? We're now, my slide should have been updated, forgive me from earlier, but we're now in excess of 2,000 5-star Google reviews. All the evidence is there. That's what makes us unique. And so, take a look at any other company and do some research on Google. How many reviews do they have? And what do those reviews read? You would be hard pressed to find a sample size of our reviews that don't include words like team, professional, respectful, kind, helpful, readily accessible. All my teammates, including you, Neil, you all deserve the credit for that. If those reviews were bad, that's on me entirely. But because they're so great, all of you deserve that credit. That's what makes us unique. But look, we're not for everybody, and we're not in business to please everybody. Otherwise, I'd be talking to you about buying ice cream from us tonight, not implementing this process in your life. We love to serve clients who possess optimum mindsets. What are those mindsets? These clients are coachable. They recognize that there's always something new to learn. There's no such thing as having arrived in knowledge. If you feel like you've learned everything there is to know and there isn't anything for you to learn, we're going to mix together like oil and water. Clients who are kind, respectful, and responsible, and who have strong family values. If you don't like your family and they don't like you, we are not going to be well suited to work together. If you have a business and you put your team before your clients, we're going to be well suited to work together. If you have a business and you treat your teammates like you would your own family, we're going to be well suited to work together. How does Ascendant get paid? We get paid in Canadian and American currency. The life insurance companies pay us directly, and it's either Canadian or American currency. And we get paid really well for what we do.
There is a question about the cost for coaching on top of any sort of monthly premium. Is there additional cost there, Jason?
No. Martin and Bonnie, Dancer, a wonderful couple, great family people, amazing. They run a really successful vacuum truck business, and they began to implement this process. So they started by putting 50,000 in premium each year, and then they expanded with an additional 50,000 each year. They had a $1.8 million starting death benefit. Now, I didn't realize that vacuum trucks are about $400,000 a piece. I had no idea. And within their first 4 years, they were able to finance their own vacuum truck. What they were doing before is their accountant said, well, you got to build a sinking fund. And I said, well, okay, that's one way to do it. But the only thing that's going to sink is your net worth. A sinking fund is where you save the money and then you withdraw all the money so you don't have to go into debt to buy the thing that you want to buy. That's called a sinking fund. But the only thing that sinks is your net worth. What Bonnie and Martin did is they borrowed against the cash value of their policies, purchased the vacuum truck, which is free and clear because the loan, the lien is on the death benefit, not the truck. Every day that they have employees driving the truck earning revenue, what's happening to their cash value in their policies? It's going up. Now they control the repayment schedule and they recapture all of the money. So when they're ready to buy the next vacuum truck, they have enough capital to buy two. Whereas with the sinking fund, the moment that they withdrew the money from the corporate bank account, it's gone. Here's the deal. When they created their family banking system, which their words, they refer to as their own ocean of cash, their passive income in retirement is assured. They have ever increasing permanent death benefits, 6.4 million plus, that's rising annually, daily cash value growth, annual dividends, death benefit, which is all non-taxable. They have ready access now to more than 2 million in cash, rising daily. Alan and Janet Antonio, real estate investors. When I first met them, they had money in all sorts of different investments. So they decided to sort of apply their focus to real estate. And when they first met me, they had a portfolio of real estate and they had about 13 years left on one of their fourplexes out of their portfolio to repay that mortgage and get it off the books. Well, when they began this process, they began with one policy. So they bought their first policy. In their first year, they purchased 5 more policies. They expanded their program to include all their grandchildren. Within 3 years, they eliminated 3 mortgages, 13 years ahead of schedule. They financed their daughter's first home in the United States entirely with a policy loan. Their daughter was going to borrow the money from Wells Fargo, and instead they went to the family bank and borrowed the money from the family's money pool. So now all those mortgage payments are flowing back into the family's money pool, not Wells Fargo. Now, college funding, passive income, all of that is assured. They're creating generational wealth for their children and their grandkids. 4.1 million in permanent death benefit rising every year. This is their quote, and everyone that you see in this photograph is insured in their family now. Every single one of them. These are the possibilities of implementing this process. The fact is that many people are just one tiny little bit excuse away from taking a progressive step forward in their life. Most people let procrastination cheat them, simply cheat them out of great big leaps of progress. Don't be like most people. Infinite banking goes beyond a single policy on your own life. So if you're just thinking about how can I implement this on my own life, it's truly about a system of policies on everyone that you have an insurable interest in. Okay, let's do a real quick crash course in logic. As you build your own warehouse of wealth, you grow a pool of capital that's readily accessible on demand on your terms. Your family's money pool can never be repossessed or lose value, puts you in a position of total and absolute control financially. How much of your money do you not want residing there? Logically, because from that place, you can set about achieving all of your other financial objectives. It's not an either or, it's an as well as. I'm going to become my own banker as well as invest in real estate. I'm going to build my own warehouse of wealth. And from that warehouse, I'm going to invest in insert product here. It's not an either or. And would you ever object to putting more money in? Because remember that fundamental truth, your money must reside somewhere. That is fact. It has to reside somewhere. And so would you ever object to putting more money in? Yes or no? Just picture a day when you are controlling this banking function as it relates to your needs. Picture a day when your spouse leans over to you and says, thank you for not making me wait 40 years to enjoy the lifestyle that we keep talking about. Picture a day when your joint venture partner says, gosh, these deals are getting easier because we have ready access to an ever increasing pool of capital. Picture a day when your business partner says, thank God we don't have to deal with some nosy banker when we decide how and when we want to grow our company together. Versus, wow, I really regret not doing anything with that. And I'll remind everybody what I shared earlier, that one of the most important quotes from Nelson was that unless you understand the problem, the solution just won't matter to you. So the reason why everyone is not doing this is because everyone doesn't understand the problem. So the solution just won't matter to them. Those who understand are doing this.